How can a CPA assist in risk management and regulatory compliance?
Okay, regarding the risk management for real estate is basically two things. One is the asset risk, the risk that not having an LLC will impact your network, your personal network. So if you follow the first step in your journey of real estate is to provide an LLC for your investment, that will be the first thing to, let's say, to commensurate risk, to reduce the risk that you have, the risk that if something happened in the property that you own, there is an accident or there is a person, let's say that there is a non-qualified contractor that is doing the roof or doing a repair, and he or she falls. As you are renting the place, the contractor will bring a lawsuit against the renter or the tenant and against you because you are the owner. So unless you have good insurance, I will always advise our clients to have, when the properties are their name, to have insurance, regular insurance, and also additional insurance that is called umbrella umbrella liability insurance. That is additional insurance to cover the portion that the homeowner's insurance is not going to cover. That's why I always advise with the client, because there is one of the things is when you buy a property at your name with a mortgage, you cannot transfer the property to an LLC. You cannot buy a property with a mortgage and put it into the LLC because the bank will not allow that. If you are not allowed to do that, then you have to have at least what is called Plan B to reduce the risk that your network, your assets are going to be compromised. The assets in addition to the house, because imagine the lawsuit is big, the person either lost an eye or the person lost a member of the body, and then bring a lawsuit. The house is not enough to, you sell the house, the insurance is not enough to cover the lawsuit. Then you're facing with your additional property to sell it for satisfy the lawsuit. So what you can do there, you have to have additional insurance, what is called liability insurance. But the problem is there that providing that you have, or while you have a mortgage, you will not be able to have an LLC for the property because the bank will not allow. We've seen clients that, for example, they transfer the title of the property to the LLC, but even though they do that and they keep the mortgage on their name, in the contract of the mortgage, that could trigger the payment of the immediate payment of the mortgage. You have to be very careful. So when there is no way to put your property into an LLC because you have a mortgage, better have enough insurance. And if you have one property, maybe it's not a big deal. But if you have multiple properties, then it's better to have a liability insurance, a good umbrella insurance that is going to cover. Therefore, you don't have any worries. So that is in terms of the reduction of the risk for the protection of your assets. That's the main thing, having your limited liability company. That's the reason that we advise having a limited liability company, provided that you're allowed and you are buying the property in cash or with private financing, that you're able to put the property into an LLC and the property is for rental. Do not put your property, your personal property, your house, and not put it in an LLC because then you will lose your homestead exemption. So this is only for rental. That will be one side, the protection of your assets with the LLC. And the second side will be the reduction, if you don't have an LLC, the reduction of the risk with additional insurance in the form of a liability insurance or umbrella policy. Those are the two ways that you are able to reduce the risk when you are dealing in real estate.